This is Eric Muathe with Muathe.com. Let's take a look at a stock here that had a major run over the last couple of days. So for example here, just to give a little bit of color and perspective, on this day here, the stock jumped as much as 224%, give or take, from the close here to this intraday high. Should have mentioned this is a 6 months daily. The reason why I'm doing that is so we can see this recent spike and drop clearly. So you had a 224% gain on that day. You closed up for the day only up about, let's see, 56% higher for the day at the close, which is this close here. And then the very next morning there was a secondary offering and the stock opened here down about 59%. So that's a very wild ride. Another way of saying that all the traders who were holding on to shares at the close of this day opened the next morning down almost 60%. That's a massive drop. Something we would all want to avoid for sure. Something else to consider also here is if you take this high at about 1620 and the close here at about 7.76, I believe, this was a big drop intraday, a drop of about, let's call it 52%. That was in itself a warning. So you see a stock that was trading at 16 closes the day at 7, that's a red flag. Very risky. You need to get out of that situation just because of the intraday drop from the highs to the close. So that in itself, in my opinion, was another reason to get out before this 56% drop in the very next morning. So now we're taking a look at the 2 hourly. Using my uniformity method, I'm going to draw a line like this. And you'll notice that this line gave us the break here. And since then, it has been offering resistance with uniform activity for short-term highs on the 2 hourly. Uniform activity here. So we can see intraday, had you seen this uniform activity rejection, you would have known that this was a time to get out even before the major drop the following morning. So by the time the stock is trading here, it's already given you uniform activity above the line, back below it. That in itself is a sell signal. Also, let's not underestimate what I talk about, which is RSI 69.1, uniform activity rejection. And we can see RSI 69.1 uniform activity rejection on this 2 hourly period here for this high. And we can see this is uniform activity above 69.1 and back below it. So in other words, we can see RSI 69.1 rejection here. And again, this is uniform action above RSI 69.1 and back below it, which means both of these were sell signals at these levels here. Combine this with the previous line, and you can see how this was confirming that this reversal with uniform activity above the red line back below it was a sell signal, just like it gave a reversal here with the rejection during those highs. So combine 69.1 and the red line uniform activity action, that's a time to get out. Back to the 6 months daily. And just want to show you another one single line, which goes like this. This is now on the 6 months daily view. You can see uniform activity rejection here on the daily, uniform activity rejection here on the daily for this close here. On the daily, we also have RSI 69.1 uniform activity rejection. By the way, as a side note here, this is RSI 61.8 uniform activity rejection during this reversal on the daily chart. In other words, understanding the single line analysis and where the RSI shows uniform action. What I'm saying is you would have avoided this drop and also this massive plunge, especially if you combine the 2-hourly analysis. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. EACS.